Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, September 30th, 2025, and here is everything you need to know as the markets open for today. Let me start with what happened across the pond overnight. US markets ended Monday on a positive note, snapping out of a 3-day losing streak. The Dow Jones Industrial Average climbed 69 points, or 0.1%, to close at 46,317. The S&P 500 gained 17 points, or 0.3%, to finish at 6,661, while the Nasdaq Composite rose 107 points, or 0.5%, to 22,591. The big story continues to be the looming US government shutdown, with President Trump meeting congressional leaders yesterday to try and avert it. If no deal is reached by midnight tonight US time, we could see delays to key economic data, including Friday's crucial jobs report. Interestingly, markets seem to shrug off these concerns, with tech stocks leading the recovery. Electronic Arts was the standout performer, surging after announcing a massive $55 billion all-cash deal to go private. The gaming giant will be acquired by a consortium, including Saudi Arabia's Public Investment Fund, Silver Lake Partners, and Jared Kushner's Affinity Partners, at $210 per share. That's a 25% premium. This marks the largest private equity buyout in history. Meanwhile, Nvidia gained nearly 1% as investors digested its $100 billion investment partnership with OpenAI announced last week. The deal will see deployment of at least 10 gigawatts of AI infrastructure, that's equivalent to powering over 8 million US households. Moving to our Indian ADRs overnight, it was a mixed bag with most stocks closing marginally lower. Infosys ADRs ended down to $16.32, extending recent weakness. Wipro is marginally up. HDFC Bank ADRs dropped marginally, while ICICI Bank declined 1% to $30.31. The broader weakness in IT ADRs continues to reflect concerns over the Trump administration's proposed $100,000 annual H-1B visa fee, though brokerages suggest the long-term impact may be limited as companies increase offshoring and localization efforts. Turning to Asian markets this morning, we're seeing a largely positive start to the session. Japan's Nikkei is trading down 0.7%, but Hong Kong's Hang Seng is advancing 1%. South Korea's Kospi has jumped 1.2% higher, and China's Shanghai Composite gained nearly 1% yesterday, closing at 3,863. Chinese markets got a boost from continued AI and tech sector strength, with industrial profits surging 20% in August, providing some economic optimism ahead of the National Day holidays. Gift Nifty futures are currently indicating a positive start for Indian markets, trading around 24,800, up approximately 150 points from yesterday's Nifty close. This suggests we could see some relief rally after 7 consecutive sessions of decline. On the global front, the main focus remains on the potential US government shutdown beginning tomorrow if Congress fails to pass a funding bill. This could delay crucial economic data releases and add to market uncertainty. Crude oil prices fell sharply yesterday, with WTI dropping nearly 4% to $63.16 per barrel on reports that OPEC and allies are considering another production increase in November and resumption of production in Iraq's Kurdistan region. Gold hit fresh record highs above $3,855 an ounce as safe haven demand increased amid government shutdown fears and a weakening dollar. The dollar index fell to around 97.9, down 0.2%. Domestically, all eyes are on the RBI's Monetary Policy Committee meeting that began yesterday. The 3-day meeting concludes tomorrow with Governor Sanjay Malhotra announcing the decision at 10 a.m. While most economists expect rates to remain unchanged at 5.5%, there's growing chatter about a possible surprise cut given benign inflation trends and the need to support growth. Foreign institutional investors continued their selling spree, offloading stocks worth 2,832 crores on Monday, while domestic investors provided support by purchasing shares worth 3,690 crores. The monthly F&O expiry today is likely to add to volatility, with maximum call open interest at 25,000 strike and strong put writing, visible at 24,600 levels. From a technical perspective, the Nifty 50 finds immediate support between 24,600 and 24,400 levels. The index has formed a bearish candle with upper shadow on the daily chart, indicating selling pressure at higher levels. Key resistance is placed in the 24,800 to 24,900 zone. A sustained move above 24,800 could trigger short covering and push the index towards 25,000. For Bank Nifty, currently at 54,461, immediate support lies at 54,200, followed by 54,000. On the upside, resistance is at 54,800 to 55,000 zone. The RSI remains below 40 for Nifty, confirming bearish momentum, though oversold conditions suggest some consolidation or bounce could be on the cards. Looking at today's setup, with Gift Nifty indicating a positive start and oversold conditions, we could see some relief rally in early trade. However, given the 7-day losing streak and monthly expiry, I'd advise caution. For traders, watch for stock-specific opportunities in beaten-down names, but keep positions light given the RBI policy announcement tomorrow and global uncertainties. The 24,600 support zone could offer good long entry points if markets dip, but ensure tight stop losses. Focus on sectors that have shown resilience. PSU banks, oil and gas, and energy names could continue their recent outperformance. That's your morning market roundup. Stay tuned for live market coverage as we navigate today's volatile expiry session, and don't forget to send in your questions for our evening wrap. Until then, trade safe and stay informed.